Hello, welcome to our August property market update. Some of you may know that we've been on tour at the moment through My Millennial Money, having live podcasts around the country. And we're getting to speak to our buyers agents and real estate agents and everyone on the streets and on the ground. What's happening around the country? Well, it's pretty much a similar story where we're definitely seeing the market slow, and thank God, because it's been a couple of years of pretty intense growth for good assets around the country. So that's pulled back a bit. There's no longer the fear of missing out. Agents are starting to call us back instead of ignoring our phone calls when we're putting in lowball offers. And generally speaking, I want to declare it a buyer's market. We're having some good fun out there, getting some good deals, getting some good discounts, I believe, in markets that are still quite solid and will be solid for the long term. So that's probably the key for August. And my message to everyone is that understand that we can get a discount, but we don't want to get a discount on an ugly pig, right? It's always going to be ugly. It won't change too much. So you want to buy at a discount on a good asset, not a bad asset, all right? So just keep that in mind when you're out there wheeling and dealing. There's a lot of fear in the media. There's a lot of doom and gloom. We've got to put that to bed, put that to rest, and just have a positive mindset about the future. As some of you know, I love endurance sports, and this property growth or this wealth creation is an endurance. It's not a sprint, and you'll see the ups and downs along the journey. And we're going through a period now where there's a bit of uncertainty. I think it's actually time to act, and it's better than it probably was 12 months ago to act, knowing that we can still get some great deals out there and some good deals that relate to our cash flow and our yield in our life. And that's the important aspect. Yes, we've had interest rate rises, but we just need to readjust our strategy somewhat so that we're not drowning in the negative gearing aspect of what a lot of people do when they buy property. We look at debt to income ratios. So the banks maybe have a ratio of 1 to 6. So if you've got an income of 100,000 and 600,000 of lending, that's a 1 to 6 ratio. So just check out what your debt to income ratio is, but keep in mind that that's what the banks might assess you at. It's what you can handle in your life and the cash flow that's being generated from your portfolio. So it's just not black and white based on what mortgage brokers or different banks have told you. So there you are. That's a wrap. That's what we're seeing out there on the ground. As always, if you need some help sourcing a property, we've got our buyer's agent service to help out there. If you want to understand more about what your strategy should be, that's also included in that package as well. If you just want to run a few things by us, we do run a clarity call that's open to the public. So click on the links below to get that sorted. Have a great day.